The recent rate cut forecasts by the US Federal Reserve fired off stocks of Indian IT majors last week. The Nifty IT index, which had remained an underperformer to the benchmark Nifty for 2023, is now holding higher gains after last week's rally. The Nifty IT index is up 25% for 2023, higher than an 18% gain in the Nifty 50. Over December 14 and 15, the IT pocket rallied as much as 8%, its biggest two-day gain since July 2020. In the first 2 days of this week, however, the index has paused the rally on profit booking. The recent strength limits further upside in select stocks like HCL Tech and Persistent, says Kotak Institutional Equities, which has downgraded the two scripts. It has, however, raised target prices for the IT pack by 9 to 20% as global headwinds are seen bottoming out amid rising hopes of a soft landing for the US economy.
The sector headwinds are clearly bottoming out, and gradually we'll see earning recovery happening in FY25 and FY26 because the deals are still very strong, but closure of that deal and execution may be gradual going forward. But overall, I see the valuation in the large cap is still much more relatively reasonable as compared to some of the mid caps. So I believe that IT sector provide a good opportunity. If someone is willing to invest for next 2-3 years or 2-3 years, I think IT sector still provide a good opportunity for long-term investment.
Those at Kotak Institutional Equities also note that the gains in IT stocks this year have majorly been due to multiple re-ratings, even as FY24 and FY25 growth estimates declined in the same period. The brokerage's current forward growth estimates for FY26 are lower by 1 to 4% than its estimates for FY24, which were laid out 2 years ago at peak multiples. The valuations, it says, are approaching the peak levels of FY22. That said, from a short-term perspective, technical charts show the IT index can remain steady, ahead if it holds the 34,850 level.
The bias for Nifty IT index is likely to remain positive as long as it holds above 34,850 level. On the upside, the index will see fresh momentum on break above 36,550. Similarly, bias for Infi seems favorable above Rs 1520 with a potential upside target of Rs 1725. TCS is expected to get considerable support in the Rs 3680 to 3700 range, whereas near support for Wipro is seen at Rs 435, below which it can dip to Rs 420.
Thus, a recovery for global IT spending and gradual IT earnings is expected to begin from FY25, and experts favor the sector as a long-term bet. Today, on December 20, investors will keep an eye on crude oil prices and the consumer confidence data due in the US.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's making plans for an early retirement. Business Standard.